Hey everybody, welcome to Trading Capital's daily analysis video on natural gas. There's been a lot of questions and specifically a lot of chatter about natural gas. This asset class has been demolished over the recent weeks, and what we'll be discussing in this video, due to a lot of sentiment, bearish sentiment, and fear in the natural gas space, there's often talks about natural gas going negative with this decline happening. Now, my base case is not for it to go negative, but there is always the possibility of that doing so. We saw oil not too long ago, but you would have to ask yourself, what would send natural gas negative when we're supposed to be in a natural gas energy crisis around the world globally, especially in Europe? For instance, what sent oil negative was the COVID lockdowns and shutdowns. So you would naturally have to anticipate really a variable of that size would have to be able to send natural gas negative, because there's always going to be some sort of demand for natural gas, being the fact that it is the primary heating source for many homes, a lot of cooking appliances, industrial use. There's a massive, massive use for natural gas. But nonetheless, let's put all the rumors aside. Let's see what the charts are saying and what the historical data we can analyze, and see if we can draw any conclusions that can yet again make us some money trading or investing in the short and long term. So, with the recent price action in natural gas from this high all the way December of last year to this low, you've fallen minus $4.61. So I want you to keep that number in your mind, because when we actually scroll to the rest of the chart, you can see the natural gas high was over here, but this $4.61 has appeared a couple other times in this cycle. You can see from this low to about this high, that was a plus $4.61 move. Then again, we can see from this low to this pivot high, that was another plus $4.61 move. Now I'm just going to open up this chart to the weekly chart just so we can see a little bit of a more larger perspective. And what I want to bring to your attention is the technical support in two different categories we're hitting. The first one, you can see this 2018 pivot intersecting with this 2020 pivot, intersecting with your 2021 breakout. And basically, this has now been tagged. There could be a potentially a little bit more downside, maybe hitting this low pivot over here. But this is massive, massive technical support. This is a retrace back to the breakout area. Here you broke out. Now you've done a full round trip retrace right into support in an oversold condition and in an 8-week consecutive down count in natural gas. I mean, to see natural gas fall this sharply, this quickly, we have actually never seen a rate of change fall this fast in natural gas. And I will go over the natural gas price history of a couple different cycles nearing the end of this video. Along with this breakout trend line that we're tagging now on a weekly chart, you can also see you have this symmetrical parallel channel connecting your pivot highs over here, your reversal pivots, your breakout zone until natural gas made new highs, and then it also connects with kind of your double top over here and over here. And the beautiful thing about this symmetrical channel is it's connecting multiple pivots, it's aligning with your breakout zone, and it's also aligning with this measured move of $4.61, accompanied with major, major weekly pivot zones and consolidation. And this level of natural gas, you have traded around this 2040 level many, many times. You can see you pierced it here, but you had a ferocious rally. You pierced it here, you had a ferocious rally. You pierced it here in the dot-com crash, and you had a ferocious rally. All the chop over here. So this level is certainly not shy to natural gas trading down here, but naturally the price action tends to often rebound with ferocity back to the upside from this level. I'm not saying there can't be more downside, there certainly could be, but in terms of a technical trader and as swing or day traders, these are the levels we have to take shots at. Now, in terms of UNG, there is a UNG chart is very similar, of course, just due to the fact that it's a little bit of a different ETF. But UNG, you can see, are hitting this double bottom zone. Now, the max downside move I have for UNG is actually to this white line around 730-ish. I'm not saying it's going to hit that just due to how oversold it is, but that is the potential downside that I have calculated based off of this topping formation and break. Now, can it often surpass this level? It could. Is it likely going to surpass this level? Not as likely considering how oversold we are at technical support. Now, in terms of cycle history on natural gas, let's flip to the natural gas futures chart just so we can analyze this perspective. So basically from the high to the low right now, natural gas has had a 77% decline in about 168 days. Now, if we scroll through back in history, I've marked out some key time zones that we'll be paying attention to. So basically, in this 2013 cycle to this 2016 cycle, a 3-year cycle, natural gas fell 75%, but it was over 819 days. So look at the difference in days, 168 days versus 819. This was a much slower grind over a 3-year period, and this has been a larger drop already in a shorter duration of time. So just to put in perspective the declines. Now, if you look at the '08 GFC crash, you can see natural gas had a decline from the high of 1384 all the way down to a low here of about 240, which is where we're currently trading, right at this pivot zone in the present future, in the present environment. But this decline was about 82% over 434 days. The decline we've currently went through, 77% over 160. So almost a third of the time, but yet again, very similar in terms of how big the drop is. Now, there would imply that there's additionally more downside if we were to get to down 82%, but certainly for the amount of time that has transpired compared to our drop is much significantly and much sharper. Then you go to this 2005 2006 period, and you can also see that natural gas fell in 280 days, 73%. So a sharp drop, but definitely not as sharp as we're currently experiencing. And then finally, this next major down cycle was basically from the 2000 dot-com crash. You fell 81% in 273 days. So this cycle is actually experiencing the most similar rate of change movement in how fast and how sharp natural gas is declining. And what we can deduce from this dot-com cycle is that if you let me just scroll to the this current cycle that we're in. Basically, if you see, we have 8 down weeks, consecutive down weeks in a row. The only other time we experienced 8 consecutive down weeks was in this dot-com cycle crash, and it was roughly in this period over here where you actually had, now some of these weeks actually did technically finish positive, but all the candles still represent red candles. But the only time you actually had 8 consecutive down candles was in this block of time. And it's very, very interesting because this, I believe, is to where we currently potentially are in natural gas. And this little consolidation point here represented about a 20, I believe a 24% rally. So certainly enough upside for us to potentially capitalize on a technical bounce of mean reversion. Now, like this cycle happened, natural gas ended up going lower and rebouncing and then making a double bottom. So we could potentially be in this type of cycle. It's aligning mostly with what we're experiencing today, and it's also aligning mostly with how the tech is acting and how tech acted in this cycle. And then if we actually compare the S&P 500 overlay, so I'm just going to overlay this S&P 500 in a new pane here. And I just want to compare what we're experiencing in the S&P right now and in compared to previous cycles. So let's just start basically right now. So right now the natural gas has fallen off a cliff, and you can see that this is the S&P down here in the orange. We're actually having a technical breakout. Now, if we scroll back through history, I want to bring your attention to this dot-com cycle, the cycle that is most similar to the cycle that we're currently experiencing. So in the dot-com cycle here, basically natural gas was falling. And keep in mind, this is, I believe, the period we're currently in on natural gas. And we're very close to kind of this potential bounce in natural gas. But basically on this 8-week time count down, you saw the S&P, and if I actually adjust these pivots here, that's more like it. You saw the S&P here in this clear downtrend for consecutive months, multiple consecutive months. And then you saw it hit again, failed, went lower. And basically right now you're seeing on the current S&P environment a breakout, just like you saw here in the dot-com crash as we're approaching this 8-week consecutive time count on natural gas. And what's happening is a lot of people have piled in on this euphoric rally in the stock market as the S&P is potentially breaking out. And what transpired here was we actually saw the S&P starting to roll over and make new lows. So just kind of like what we're experiencing here with natural gas, if natural gas gets a bounce in the next week or two, and over the course of say 2 to 4 weeks, we continue to chop sideways here in a range, if this cycle starts to play out, it could be indicating that also the S&P is about to roll over and potentially have a fake breakout. So it's just interesting to note that we could be on the verge of this very similar thing, because often it's very difficult for energy to be diverging so vastly from the S&P 500. Often this type of move in energy, this type of rate of change fall is very rare. We don't see this too often. We saw it once here, once here, once here, and it's very reminiscent of what we could be experiencing in this .com, where you have this fake breakout, also a fake breakout here potentially, and we'll start to see if we roll over and make new lows on the chart. So obviously lots to keep in mind, but we are long natural gas. If natural gas were to continue to flush down on the UNG, basically my next ad level would be 778 and then 733. I would continue to accumulate more. And this is the importance of natural gas and trading commodities, is that you have to be very, very careful about your position management, because often the case is that so many people would have piled in, at this technical support, with a full position, and it's just been bleeding lower. You haven't really got any bids. So we have to keep in mind position management and risk. But with this volume trading on UNG, it's likely you're going to see a technical bounce very, very soon. And I do think that could correlate with a stock market rotation of capital out of the stock market. Now, if we even look at oil, so the US oil chart, the WTI, let's pull up this chart for us. So oil's interesting because oil's also signaling this M-top formation, on watch for potential confirmation. If we confirm next week below these $70 range, oil could also be signaling a free fall. And when leading energy stocks are signaling a free fall, it's very reminiscent to how energy often beats the stock market to a low. And these patterns triggering would indicate the same similar cycles that we often go through, where tech catches a relief bounce, energy starts to soften up and weak, and then we see energy beat tech to a bottom, but they both simultaneously decline very precipitously and sharp. So we'll keep an eye on energy. XLE, obviously, we have touched base on this in our weekly sector analysis. But in terms of XLE, with these massive, massive divergences, the XLE is often one of the last sectors to roll over at the next stage of the bear market. And I believe that's what we could be potentially seeing, especially if oil were to collapse and trigger these M-topping formations that are on the potential horizon here. I mean, even on the WTI chart, you can see that M-top formation on the brink of triggering. So lots of potential action that could be transpiring. Again, I'm not shorting oil, but I am shorting a bunch of energy stocks. So we have a great deal of exposure in the event that things potentially start to trade even lower. But other than that, I mean, we are at technical support. You're oversold massively. Even if you have to pull up the RSI on the chart for natural gas, let's just let this load. You can clearly see we've been oversold for about 4 weeks now. You're even oversold on the daily chart for the same amount of time, but it's just been a trickle down lower. And obviously, with this type of fear and price action, and if we do see a bigger fall in the stock market, natural gas can obviously slice through technical levels like anything else. But the risk to reward setup is now in favor. And if you actually look at the natural gas volume, there's a little bit of a negative divergence occurring where the price is going down and the volume is decreasing. So at least we're starting to potentially see the volume trends start to subside as they are going down. So what you don't want to see is really a volume tick up. As long as this slowly starts to decline, I do think we can eventually get some buying pressure to uptick this volume in the right direction. But other than that, clearly beaten down. It's important to understand using risk in levered ETFs like BOIL. BOIL's great for day trading. I don't particularly, sometimes I'll swing trade it, but just the way natural gas moves, these levered ETFs decline so fast. Yes, they can bounce very fast as well, but I mean, they're just so scary trading. I mean, we traded KOLD short. That would have been one of our best trades if had we held it. I can see my old average was down here at 1360. So had we held that would have been an awesome trade. But again, this is the life of swing traders. You often exit much earlier and run with your profits and look for new setups. But at these current levels, natural gas is providing a great potential opportunity. And I do think that it's certainly one of the better risk reward setups based off of how money should rotate out of the stock market. Other than that, if you enjoyed this natural gas video and want to learn and continue to get updates as to how we're trading it, continue to follow our channel, like our content, share our content, and most of all, check out our website at Trading Capital to see how you can benefit and learn with us as we trade and navigate these financial markets. Other than that, take care, everybody. Enjoy the rest of your weekend, and it should be an interesting price action week as we head into a action-packed week next week. Take care, people.